Welcome back, everyone. Today we will talk about a big profit deal, 572 million US dollars in just 6 months by Icahn. And before we dive into it, please subscribe right here. Yeah, like right now. Great. Thank you. Let's dive into it. So Icahn is an American, one of the wealthiest investors and businessmen and philanthropists in the whole US or even the whole world. His net worth is around $19 billion, and he's known for special deals with companies where he basically buy a significant stake of a company and then get also some board seats into the company to decide about the future of the business, and then decide that what this company should do. And most of the time he either split the company or he basically sell the company to another competitor or a bigger company, and then trying to make as much as profit as he can. And guys, he strikes again.
All units respond.
Let me rewind back. So it's January 2019, and CNBC just reported that Icahn invested a stake of 15.5% into Caesars Entertainment. Caesars Entertainment, of course, it's known for its Caesars Palace in Vegas and a couple of other entertainment projects, especially in the gambling industry. So you basically have this big casino group that it's not going really well for them the last couple of years. And there was just recently then a purchase offer to buy Caesars Entertainment for around $13 a share price, but not without Icahn. Icahn then basically bought himself in after the deal was refused by Caesars Entertainment with 15.5%. Which basically was around $778 million. If we take the share price of 7.5 on average, it was not announced for how much he bought his shares, but it can be estimated that it was around 7.5 US dollar. So when he purchased, he also demanded for a board seat, which gave him basically then power to decide within the company. So we basically just now on June, we just got announced that Caesars Entertainment just got sold to Eldorado, which is another big gambling company, for a share price of $13 per share, which valued the company for around $8.7 billion. And which makes Icahn's stake to $1.38 billion. So now just go back a bit, rewind. So he bought for $7.5 per share, and today it got announced that Caesars Entertainment got sold for $13 per share, and the transaction is done. So Eldorado becomes the biggest gambling company with a value of $18 billion total value on the whole US market. But think about it, 7.5 US dollar per share, and it got sold for $13 per share. That's a whooping 73.333333% profit, guys. Okay, that's unbelievable. This is how the big guys work. So they make money, go to money, and they make big purchases. They play with their network. Icahn, he's very known for that, going inside companies, buy the stake, sell them out, and make a huge profit. So basically the overall profit was $572 million US dollar in cash, guys. Okay, so that's only from January to June. That's 6 months and $572 million. I cannot say it enough. It's $572 million, guys. Okay. When the deal in January got announced, just that day, Caesars Entertainment made a big jump. Why? Because usually it's known for Carl Icahn when he doing this kind of deal, especially him with his huge successful track record, that, you know, it's something behind. He put really much pressure on the management to sell to the companies, and here's actually how he do it. So basically, once he got the stake in the company, he gets also board seats, sometimes even multiple board seats. So if you can imagine, a company has, for example, 10 board seats, and each of the boards has one vote, and he gets multiple, he gets more power into decision making of a company. So he chooses some companies that, you know, that are not doing well, or that already got one purchase offer but refused, and then basically he goes into the company and try to sell it and make a big profit very, very fast. So one general thing though, if you are in the stock market and see that companies get an offer for get purchased, then most of the time it's very, very likely that this deal in the end gets happen, because, you know, if a big company want to buy another big company, then they make one offer, and same like on any market, they basically go back and get refused, and the other company that gets bought to want a bigger offer, and so on. So there is some negotiating, and sometimes the negotiating can take even years. What happened, for example, with Monsanto and Bayer, which was a huge merger in the pharma industry. So this is a tip actually for you guys. So if you see that a merger might happen and get rejected, then you can buy the stock and hope that there is another offer then to buy this company, because most of the time, for example, in this example of Caesars Entertainment, the company that buys the other company, the smaller company or the equal company, offers always more than the current stock price. So let's say the stock price is around $10, then most of the time they offer like 30-50% more of the share price. So that would be like maybe 13 or 15 US dollars in comparison, which, you know, you can pocket a nice profit from that if you just keep on going and stick to the long game, you know, because as I said, it can take months, it can take weeks, it can take days. In this specific example, it just took 6 months and $572 million, guys. I just can't say enough the number, because it's just mind-blowing. You know how actually you should calculate it per month and how much salary this is for a little bit dealing with Caesar, you know. However, let's not go into that. I would love to know what you think about the deal. If you know Carl Icahn, and like the video if you like it, and don't forget subscribe, but not only subscribe but hit the bell so you get immediately notified when I post a new video about business, finances, investment, and don't forget, the grass is greener on the other side.